Right, so thank you, Janelle, and greetings to everyone. So remember, if anybody remembers my 3 key messages this morning, what was the first one? What was the first key message? Okay, if you can't remember, no lunch. Right, people first. Thank you very much, Denwick, CEO Bank of Nevis. People first. And that's where I want to start. People first. Because open banking and open finance are predicated on a powerful idea that you own your financial data, not your bank. That you own your financial data, not your bank or credit union or financial institution. And because you own your data, it means that you have the right to securely transfer your data to whomsoever you wish for your benefit. For your benefit. Open banking, which started in the UK in 2018, was born out of this desire to empower customers to broaden their range of access to financial services. And not just financial services, personalized financial services. To give them better pricing, more competition, meaning more options, more seamless movement between banks, if you wanted to switch your bank or financial institution. And that is, in fact, the basis for which open banking occurred. I mean, it was about moving bank accounts and so on. Of course, open finance takes it to a whole other level where you're not just talking about banking services now, but you're talking about investment services, credit, pension, retirement funds, payment platforms, any and all data for your benefit. That's the power of the thing. And AI is simply an enabler here. So whereas open banking finance create the data and connectivity, open finance, the AI basically creates intelligence and insights so that you can use that for purpose and for personal impact. In the context of what we're trying to do in our region with Big Push, what we're trying to do with respect to financial inclusion, open banking and finance are concepts that we need to now seriously consider. Now, I know that's a big leap. We're not there yet. We have to look at what has happened in the UK, in Europe, in Australia, in Singapore, in Brazil, in Mexico, and learn from them. But we don't need to take 20 years to get there. So we have to look at those models and see how they can impact what we try to do here. And the last thing I'd say is, remember what I said this morning? Trust is the gold standard. So all of these things we're doing are predicated on data quality and on key principles like consumer consent. You must give permission to move your data because it is your data. There must be transparency. If somebody is using it, it has to be with your permission for a particular purpose. And of course, the whole notion of having interoperability. Because to be able to move data at your command for your benefit between providers and across providers, there has to be interoperability. So all of the standards have to be enabled to create those APIs to allow us to do that. A lot of our systems are working in silos. That's why you go in and you have to fill out a form every time. Sometimes the same institution, but a different department. Sometimes the same country, but one banking system. But that is what we have to get rid of, because you see that hassle factor, that is really creating issues for us with customer service in our region. So we have to begin to think about how these concepts will revolutionize what we do. You said lightning round. I've spoken too long.
Thanks, Governor.
Yeah.
So you surfaced some themes that we want to discuss today, specifically artificial intelligence as it relates to, use of artificial intelligence in the region to address specific challenges. And there's no better challenge in the region to address, especially within this LFI conference, than the challenge of inclusivity, financial inclusion. Karina, I would like for you to speak on how artificial intelligence, your perspectives on how artificial intelligence could be used to address financial inclusion in the region. Specifically, as it relates to women, the youth, and micro, small, and medium enterprises.
Thank you, Janelle, for the question. Just a quick addition to some of the opening remarks by Governor Antoine. Another key aspect of open banking and open finance for us in the ECCU, which we would not want to underplay, is its ability to bring about two things: operational efficiencies for our traditional financial service providers, as well as it is a framework that is suited to our innovation realities in the ECCU. We do not have deep private equity markets, and so when we approach open banking with standardized APIs, it allows us easily to circumvent some of these constraints. It allows for collaboration between the technologically agile players, fintechs, as well as the legacy service providers, our banks and credit unions, etc., who have the infrastructure already in place. So in essence, there is room for scaling, more easier than undertaking innovations from the ground up. It also allows for greater personalization of financial services. Again, scaling, personalization, it's something that traditionally brings higher costs to financial service providers. So those are two other aspects. Yes, it places our consumers in the driver's seat, but at the same time, it does offer, as a framework, advantages for our LFIs and other players in the financial services space. Now, to Janelle's question, in terms of the applicability or use of AI to advancing inclusivity for marginalized groups, and I think you mentioned the youth, for MSMEs, as well as women. The good points from our most recently conducted financial literacy and inclusion survey, we see that the disparity in access between genders is not that great. It's not that significant from what our results show us. We also see that overall, 9 out of 10 persons have access to a financial account. So this is one limb of financial inclusion. The other aspect of it, beyond having just access, is having access to adequate financial services and products. And that in and of itself depends on the ability to accurately assess and gauge users' needs beyond what is self-reported, beyond the traditional profiles that we generate for users. Artificial intelligence gives us the options of collating data from a wide spectrum, and one, not only understanding the risks and being able to manage them, but understanding what users need and helping us to address those needs by, again, personalization of financial services. Of course, the caveat here is that we do not use any of these tools, including artificial intelligence, to substitute or supplant human judgment, right? It is to help us to direct our minds and our thinking based on the highest quality of data and analysis. But it still involves us, at the end of the day, applying our own judgment in, one, interpreting what the data tells us, and two, ensuring that our policies and our actions to address where the data highlights the gaps are. So yes, AI as a tool, it is helpful and it can increase our ability to identify gaps, because not being included in and of itself raises challenges. How do we surface the areas in which persons are not able to access our financial systems adequately? And so AI gives us the opportunity to better do that. It is a magnifying glass in many ways, if used with human judgment and reasoning.
So what I'm taking away from the conversations thus far, from Governor's contributions, from Karina's contributions, is that innovation, technology, these are now a core part of the financial ecosystem. So, Governor, if you may, I'd like you to respond on how ECCB is preparing the regulatory environment to balance innovation with consumer protection.
Yeah, thanks very much. And you have to do both. And we've been very clear-eyed about that. We have to see opportunities and we also have to see risks. So one of the things we did, and it was mentioned in an earlier panel, was the launch or the issuance of a technology risk standard in 2023, I believe it was January. This was actually one of the things that the LFIs, licensed financial institutions, really wanted from the regulator, ECCB, and we were happy to do that because of recognizing the pace of change with respect to technology and the need for us to obviously have appropriate risk management frameworks. So the technology risk management standard is one, and Schwabach, the director, spoke about the unit that we created, which is now from 1 to 3 persons, including a female, and that we do a lot of work around the region now looking at IT. In fact, when we go into our LFIs, our banks and financial institutions, and we do those reviews, it's actually a free consultancy. You guys must remember that. It's a free consultancy. We come in, we inspect, and we give you a good report. And if you take that report seriously, you'll be in much better shape without extra cost. And don't tell me you're paying license fees. That can't cover that consultancy. And you are paying your license fees. Thank you very much. So that's the first thing. The second thing is the Payment System and Services Bill that we have introduced to modernize our payment system. We're working with a 2008 payments law. Now, this thing has evolved so far and so quickly that we are not fit for purpose. So the Payment and System Services Bill, which is making its way through our parliament, is intended to modernize our payment system, including provision for the introduction of fintechs, appropriately supervised in our space. So whether that's a digital bank or a payment provider that wants to do something digitally, that's allowed for, that's provided for. Then I want to mention the data protection and privacy framework that we're now working on. We have published a policy consideration for data protection and privacy or privacy in our currency union. We've looked at the national laws in each country. We've identified the gaps, and we are now focused on how we're going to close those gaps. It includes infrastructure like a data protection authority, because none of this works. We don't build and maintain trust without appropriate safeguards like data protection. And so that is a very important piece of work that we do now. I know some countries would have passed data protection laws. We've looked at those. They are deficient with due respect, and we have identified the gaps. That is something we are actively doing right now. And our expectation is that data protection laws will come to our countries through the central bank next year. We are also establishing the Office of Financial Conduct, which is to deal now with consumer protection. So I've spoken about enabling innovation, the payment systems and so on, but we have to protect people. The Banking Act does not give us those powers. Hitherto, it is now doing that. And that law has already been passed in St. Vincent and Grenadines, in Antigua and Barbuda, in St. Kitts and Nevis. I know Minister Cornwall is going to pilot it in Grenada soon. I'm confident of that. and Grenada has a very good record with legislation, I will say that. And other member countries. And that Office of Financial Conduct, and I know some of our financial institutions are a little wary. They're wondering how far, fees and charges, will the central bank go too far in entering our business? We will do so appropriately. We recognize there are different business models. We have to understand the business models, but we also have to understand the basis for some of these charges. You can't go in Bank A and the service is costing $10, and in Bank B it's costing $50 in the same currency union, with the same banking act, with the same regulator. So we're going to have those conversations, okay? And we talk. We always have a good you know that. We collaborate. We respect you. You respect us. We're going to find a way forward. But we have to now give powers to the central bank to really be able to offer to our consumers real protection for market conduct. And that is what the Office of Financial Conduct is intended to do. So I'll leave it there with those three. I mentioned technology risk standard. I mentioned the Payment System Services Bill, the data protection, the Office of Financial Conduct and Inclusion. I'm speaking very, very quickly, as you realize. Those four are some of the concrete things, Janelle, that we are doing to both encourage innovation, but also to enhance consumer protection.
So innovation is at play. I continue to beat this drum about innovation because I sit in the technology space, And I know one thing about innovation and about technology, it is little used, it is underused unless you have the capacity to use it. So at this stage, what I'd like to do is invite Professor Waller in to weigh in on how academia could partner with governments and financial institutions to strengthen human capital to operate effectively in these new innovative spaces. Professor Waller, I hope you weren't getting cold in Jamaica waiting for us to come to you. You're on the floor. Is he with us? Okay. So we're going to move along and hope that he comes back before we wrap up so we could hear from him. So Governor, the next question, because it's related, we spoke on the regulatory side. Let's speak on the supervisory side. And we want to speak now on how AI could be used to strengthen supervisory capacity. So is that something that you could weigh in on?
Yeah, absolutely. We believe AI offers real opportunities and possibilities for us to strengthen supervision. Firstly, to automate a number of the data collection and analysis that we do. In our case, we're not just dealing with multiple institutions, we're dealing with multiple countries, 8 countries. That data collection exercise, data mining exercise, data analysis is tedious. Obviously, there are tools that we use to make it easier to do that. But you LFIs, licensed financial institutions, will attest, that the reporting requirements are significant. What we believe AI offers is a real possibility for us to streamline how we collect that data and to use more of our resources not on collection and even the first round of analysis, but deeper analytics and then engagement around how we will make the requisite changes. So automaticity. We also believe that AI allows us to more comprehensively see the financial system, because the chain is as strong as its weakest link. You could be looking at banks, but you're not seeing credit unions. You might be looking at banks and credit unions, but you're not seeing insurers. You might be looking at banks, credit unions, and insurers, but you're not seeing money remitters. You might be looking at banks, insurers, credit union, money remitters, but you're not seeing CBI, operator. You have to see all of those things to really have a good grasp of that financial system. And our hope is that with those tools, AI-enabled tools, we'll be able to have a much broader, all-encompassing, coherent, consolidated view of the financial system. Third, we must be able to see blind spots, which is sort of related to what I just said, so that we see in the entire system, we see in spot. Early warning signals. You know and I know bank resolution is very expensive, costly. Time, money, confidence, reputation. You want to minimize those. And how do you do that? Is by having the ability to system-wide use the risk radar and other tools to be able to see early signs, whether it's liquidity, whether it's capital, whether it's people, range of things that you can manage and be more proactive rather than coming at the end. Because, when we do these analyses, these assessments, they come in after the fact. And then we give you the remedial actions, and then it's a period of time to implement. Meantime, things could be continuing to deteriorate. So we want to be more proactive. We want to be more in real-time agility to deal with issues like early warning signals. And we believe that these AI-enabled tools will assist us to do that. So all of us have cost constraints. All of us, including the central bank, have budget constraints. And therefore, there are going to be limits to what we could do with headcount. And we have to be able to combine real talented headcount, as in humans, people, with the appropriate tools so that we can do more, because more is being expected of us and demanded of us at the LFI's level, at the central bank level, while at the same time managing, obviously, our balance sheet and our costs and so on. And I believe AI tools provide us to do that. And I'll end by saying, so one of the things we've been looking at for the last couple of years is a RegTech, SubTech solution that would allow us to make your lives a lot easier in terms of how we collect from you and ultimately how we analyze what we collect from you. And it's taken us a while, but we are also doing it in a collaborative way. So we're having discussion with non-bank regulators as well to see how we could come together to share potentially a technology, but also to share the costs and lower the costs for all of us. And let me end it there.
Okay. Thank you, Governor. Remember, lightning round. So one of the things I want to I want to branch off of is something you said about using AI to get a more comprehensive view of the financial system.
Yes.
And on that note, I'd like to turn to Karina to ask her to reflect on the ECCB's experience with Dcash and what lessons could be learned from that project as we walk towards an open, inclusive digital financial system.
Thanks, Janelle. Lightning round. As a central bank, we were first movers in the retail CBDC space, being a novel innovation at the time, and to a certain extent, it still is. And so many of the lessons from that experience carries over into our future innovation projects as we work to build a more inclusive and open digital financial space. But three maybe jump to mind as applicable for our discussions. One being the importance of ecosystem building. In certain ways, you may perhaps imagine that the technology is enough to bring about the results or the outcomes that you want to see. The technology is merely, at times, the platform, yes? The ecosystem is where we can find value, and that ecosystem is a supportive, enabling ecosystem. So with Dcash, for instance, that ecosystem involved critically our licensed financial institutions as key distributors, merchants as one of the material parts of the value proposition, people needing places to spend and use Dcash, but also importantly and perhaps counterintuitively, last mile support, that human element. So as much as we were engaged in introducing a blockchain-based platform for spending, it also critically required us to have the support system that could allow persons to access, to use, and to build confidence in it. So one, ecosystem building. The other is designing with interoperability from the outset. Again, given the size of our financial system, given the geographic dispersions, interoperability from the outset allows us to, one, realize more cost savings, avoid fragmentation. This means that it benefits consumers at the end of the day, because as well as service providers. When you design closed wall systems, it then means that you're operating in silos. And there's additional costs in making those connections, in having the different infrastructure, the different systems talk to each other. At the other end of this, design with interoperability in mind, and so it sets you on the path for greater utility, both as end users as well as participants. The third key lesson I'd want to add is, as much as we are very enthusiastic about the potential of technology to help us close these spaces, to connect and to make our systems more efficient, we also have to work with a broad cross-section of stakeholders beyond our licensed financial institutions. It must extend to our governments, to our utility service providers, etc., to ensure that we are not entrenching existing divides. And when I speak of that, I recall distinctly during our Dcash pilot, we had significant stretches of time in which certain islands had no electricity. Now we're offering a mobile-first digital experience, and you have islands who are facing these essential shortages. Designing a system with that recognition in mind means that you must have alternatives for service delivery. So for instance, offline services. You also are cognizant as well of the difference between our more technologically advanced financial service providers and those who are just beginning their digital transformation journeys. And so when you embark upon innovative projects such as a CBDC, such as open banking, you have to have these realities at the forefront of your mind, informing your design choices.
Thank you for that, Karina. I see Professor Waller has joined us. Professor Waller, are you with us?
Yes, I'm here.
Excellente. So I have a question for you. I've been putting it up. So we want to hear from you in terms of how you see government partnering with financial institutions and academia, or rather academia partnering with governments and financial institutions to build up human capital in the use of innovative technology. Because some of the themes that have been borne out in the conversation thus far is that the financial ecosystem, much like any other ecosystem, is now operating on a great deal of technology, more so than before. How can we make sure that the humans in the mix have the capacity to make good use of the technology?
All right, so thank you for that. And let me be very fast, as they said, lightning rounds. I would say
Lightning
one,
round.
research. We have the capacities, we have the capabilities to provide the necessary research. Salises, for example, just finished a national study on the impact of Gen AI. It's a three-part study. One, impact of Gen AI, looking at knowledge, attitudes, and practice as it relates to Gen AI.
I'm sorry,
And
who did you
also,
say just completed that study?
the Sir Arthur Lewis Institute for Social and Economic Studies,
Okay,
at the Mona branch that I lead. I was the principal investigator for that study, and we've already done 2 papers from that study, and we are in the process of preparing an AI readiness report for the government of Jamaica, so it can guide them as it relates to rolling out AI. So that's one, and it also has a readiness component, and we're seeking funding also to duplicate the study across the Caribbean, because the indicators we use were adopted by UNESCO to help with their RAM program. So we have that. So that's one, research. The second one is also training and capacity building. We do have persons with the necessary capacity to be able to train about Gen AI. They go to conferences, they interact with persons. We have a broad network of academics around the world who work with private sector companies and government agencies. I just recently, on the GTRCMC, facilitated a forum on Gen AI, and through my networks, PhD students, former PhD students who are working in other universities around the world, I was able to engage them, and they are working with big companies such as Meta, OpenAI, what was the other one? Yeah, and there was another, Oracle. They're working with some big companies, and they were able to get the chief digital officers, the chief digital transformation officer, the chief AI officers to come and speak about the future of AI. So that network that we have can facilitate training and capacity building. So for me, as I said, training and capacity building and research and innovation, I think, would be the greatest tool that academia could, is the greatest tool that academia has that can add value to governments and even the private sector.
Okay. We have a question on the floor. We could take an early question from the floor.
Of course.
Sure.
Go right ahead, sir.
Yes, Larry Lawrence, Grenada Cooperative Bank, Managing Director. You spoke very eloquently this morning. One of the things that keep me up sometimes is having a lot of liquidity, deploying that liquidity in the international markets. So having a lot of responsibility for, the savings, the shillings of just very, very ordinary people. And when you consider the stock market crashes, that has happened in 1929, that happened in the 1980s, the weakening of the bubble, the internet bubble in the 1990s. We've always seen the stock market, of course, it falls, but it also comes back. And of course, 2008, 2009. Now, having regard to the power of generative AI, and you talked about the system is able to view across various bits of data and connect the dots when maybe humans cannot. Because in hindsight, when you assess the reasons for all of the market crashes, you're always in hindsight able to see it and connect the dots 2020. So my question to you, do you believe that if the system is utilized, that the AI is utilized as expected by all practitioners, and especially if it originated from the US, are you of the view that we could minimize and maybe cause stock market crashes to maybe not happen every 10 years, but maybe every 20, 30, 50 years by virtue of having the intelligence to sort of predict it so that we take action against it. You muted.
That question is for you, Professor Waller, yes.
Oh, sorry. Oh, okay. So no, you see, the AI can provide you with predictive capabilities. There are many different AIs that can tell you that this will happen and when it happens and how it happens. But at the end of the day, you will have to verify it, you will have to cross-reference it, and you will have to take that particular step as it relates to what to do. That being said, market activities, and I'm also going based on my experience in terms of trading, even with the best AIs, to be quite frank, an unexpected, unpredictable 1 hour moment with Donald Trump will change everything. And I'm speaking from experience. Even when the AI tells you that logically, under normal circumstances, just saying people would do it this way, and you plan everything and you identify the investments, and within an hour after, there's one little announcement that is so unexpected because it's so irrational. And I'm not here berating or critiquing anybody, to be quite frank, because I love my visa. But the realities are that moment changes everything. That the AI planned, that team, that is not just an AI, this is an AI agent, right? That has planned and executed and predicted. And the AI agent couldn't, under any circumstance, expect that announcement to be made. Even I was shocked at it, to be quite frank. So the answer is no. AIs will not prevent the market from crashing because, it's, as I said, it's a symbiosis of us and them. A co-pilot, they help us to make decisions, and we have to make decisions that are rational, but unfortunately not everybody does things that are rational, that may affect our rational thinking. I hope I answered it in a politically correct way that still allows me to travel through Miami International Airport.
Professor Waller, and please correct me if I'm wrong, if I understood the question, it was not about being able to predict or prevent the market crash, but it was about being able to reduce the frequency of the market crashes, correct?
I mean, even to answer the question, again, still, it's a similar circumstance. It may or may not, because at the end of the day, the variables are so many. And as we know, the biggest part of market conversations is the human condition.
Okay.
Which I don't think any AI can accurately predict, to be quite frank. Well, they can predict for rational people, but again, let me stop right there.
Thank you for that. Thank you for that, Professor Waller. So I have a clock running because Shonel advised me that we only have a half hour for this lightning round. So I was fearful of leaving food on the table. Does everyone know what it means to leave food on the table? So you leave things unsaid and undone. But I think
may I just say one quick thing before I leave?
Yes,
I think there is an opportunity for the central banks across the region to establish a more accurate monitoring system. I think one of the problems that in preparing for this presentation that I discovered, and I perhaps can say to you in case you're moving into that kind of AI imprimatur, the fact that rather than buying off-the-shelf applications, it was always encouraged that the central bank sets up their own in-house team to create these applications to sell to governments and other persons who deal with them as a kind of control mechanism, and also to prevent external actors from getting access to your data through backdoors. So that was one of the things, a security and an income generating solution that I wanted to mention in my presentations, but I think I just want to mention it here.
Thanks for raising that. That is indeed one of the concerns of getting involved with external parties for technological solutions such as these, the issue of digital sovereignty and data sovereignty. Unfortunately, we don't have the time to discuss that today. Certainly, the next time we gather, we could discuss that because that's meaningful and important. But we are wrapping up, and I will invite Governor to take the very last question on his, and invite a look ahead from him in terms of how he sees artificial intelligence, open banking, and open finance transforming the ECCU into a model of intelligent inclusion?
Well, Janelle, I think our vision for intelligent inclusion is that everyone, citizens, residents, businesses, governments, will be able to use digital tools and AI for their use, for their benefit in an affordable and a safe way. And safe is important. We have to make sure we get it right. And so that's the broad vision. Big push, doubling the size of economies, shared prosperity, requires some big and bold moves, some big and bold ideas. And here at ECCB, we say we ought to be proactive, but prudent. I was waiting for ECCBites to respond.
They're hungry.
All right, they're hungry. All right, so I'll keep this answer really short. So we have to be prudent, but proactive, but prudent. And I really believe that we have to look now at how to embrace these technologies. They bring good and they bring harm, so we have to make sure we mitigate those. As part of building out the digital economy for our region, what are the safeguards? What are the enablers? What are the safeguards? And we know principally we have to focus on governance, ethical and responsible use. We have to focus on the question of cybersecurity, and obviously data protection and privacy. And I shared with you earlier some of the things that we are doing, because again, the choice is ours. We're going to either curse darkness or light a candle. At ECCB, we light candles. So we've been very deliberate, very intentional about taking concrete steps in our strategic plan and initiatives to help propel our region in these areas. But we also recognize, and we have to be humble about this, we can't do everything. We have to do this in partnership with you, LFIs, with our government and international partners, whether that be the World Bank, the CDB, CAF, and others. And that's exactly what we're doing. Our new strategic plan, which we are working on now, big push, accelerating the big push, as we will, well, the final tagline we will finalize, but it's going to be a big push focus, is really about how for the next 5 years, we really take it to the next level with very deliberate steps and very deliberate partnerships to help us to realize that vision. At the end of the day, when you see what's going on around the world, you and I know we have to hook up where it's possible to do our business, but at the end of the day, we have to take care of our own business. That was a discussion we were having last night about taking care about controlling what we could control and making sure that we define for ourselves what we need and making sure that we tell our story and not have our story told to us with narratives that are false, that are misleading, that are, I'll stop there, but are tinged by historical precedents which we cannot accept in 2025 and beyond. I say no more. I say no more. So, it's an exciting time. LFIs, let's partner together as we always do. Because when we come together, we are better together than anything we could do separate and apart. I'll leave it there.
Thank you, Governor. So at this point, we'll take some questions from the audience. We do have a few minutes before lunch is ready. So we invite questions.
I thought you were closing right now.
Oh,
so
go ahead, Governor.
one quick sector, so I deliberately sort of gave you a half answer, but one quick sector that could really benefit, that's all I'll say, is the SME sector. And that was mentioned earlier in Carmen and Miklas, that group, and Lisa and so on. The SME sector is a key sector for the big push. In terms of a source of employment and job creation, I mean, it's at least 50% of all jobs in our currency union right now are generated from SMEs, but they need a lot of help. SMEs need a lot of help. They demand, and Carmen will tell you, a lot of hand-holding. And it's intensive. So we have to use tools like this to help create that ecosystem where they can get advice. They just don't need capital. They need advice. They need marketing. They need branding. They need credit reporting. They need so many things. And yet for all, that's the future. We have to invest in them. And Cosell made a very passionate plea for us to catch certain colds. I don't know if that's a doctor-prescribed medication, but the point was there are certain trends we should move with. And I think we took your point. So I'm just saying that is one of the areas in this intelligent if you will, age and the vision we have for the currency union, SME sectors is really important. And the partial credit guarantee is one expression of that. Of course, there are others that have to help build that ecosystem, but I didn't want to forget that. And I want to say this because we know this to be true. Every small, large business started. Every large business started small. It started small. And as a man of faith, what do we say? Do not despise the days of small beginnings. So we have to give that sector special love and attention. And there are some tools in this age that we can leverage with the appropriate safeguards, because trust is paramount, governance is essential to help us to propel that big push.
I have a devil's advocate question for you, Governor.
You sure you want to be the devil?
No. Okay, I'll advocate for the SMEs. Angel advocate. So
they need angel investors, I will
I
agree
won't
with
say
that.
what type of advocacy, but the question I have is this. So the technologies that we're speaking of today, the artificial intelligence, the open finance, the open banking, they require significant investment, significant capital investment.
Yes.
So how do we see the SMEs truly benefiting from these technologies with their limited capital?
We have to help make some of those investments. We have to see some of these things as regional public goods, as utilities, and we have to help them with those things. It's not going to happen by them investing. They don't have even the capital to handle their own business. I mean, they have a business idea, but they have neither the business acumen or the bandwidth. So we have to make appropriate investments. So whether it is, and in partnerships. So the Credit Bureau, which is a public-private partnership, of course the heavy investment is done on the private sector side, is a tool to help them access credit, for example. That's just a simple example. Some of the payment platforms that we are going to create in which they must use to be able to manage cash flow. Cash flow is critical in a small business. How you manage cash flow. I have guys who, they're so good at what they do, they don't have time to send you an invoice. They don't have time. I mean, that's all they do, the technical piece. Sometimes you have to beg them to send an invoice.
Please let me pay you.
Yeah. They say, well, you need to run you need cash. No, they know the cash is secure. They know they're going to get paid. But that's not the way you run a business. Cash is important. So you need to be able to give them, this is why I believe potentially this is a game changer for that sector. Because with the right mix of tools, with the right mix of investments, public and private investments, you can really create some enablers for them. But they are not the ones who are going to make them. They will pay a fee here and there for things, and they should. But some of the heavy investments are required. We have to see these things as part of public infrastructure to enable the big push and what we're trying to accomplish as a region. And we don't have to go very far. If you look at the United States, a lot of these major big tech things that we see, and the government has been involved in ways and means. They've enabled some of these things in partnerships with incentives. You know, you start with the internet, and you could go look at what is happening even with AI. So we don't have those deep pockets, but we have to be smart about making investments in partnerships that will benefit all of these players. Because if we do that, take geothermal, for example. So this is not technology in the specific financial sector sphere, but think of what geothermal will do for Dominica or for St. Kitts and Nevis. Ultimately, if we can achieve what we want to achieve, which is to lower the price of electricity in our countries from 30, 40 US cents per kilowatt hour. If we have that, that's a game changer. It boosts competitiveness, household income, businesses' ability to, hotels, or ability to compete with Mexico and some of these. Well, we may never be able to compete with Mexico, but surely you cannot be spending so much on a room rate because of the high cost of electricity. And then you wonder why people make a choice to go there rather than come here. Those are the realities that you face. Or you look at airfares, well, that's a separate matter, so let me not get into there.
Okay.
So,
another forum.
Yeah, that's for a different time.
Mm-hmm.
Yeah.
May I just jump in and just say something quickly? That we have to be very careful when we say terms such as because the technology is so expensive. The truth is that unlike earlier industrial revolution technologies, railway, grids, factories, and unlike the technologies of Industry 3, the hard drives, the technologies, the computers, the laptops, and so forth, AI doesn't demand heavy physical infrastructure as a user. The most value comes from software, cloud services, skills, and the marginal cost to scale an AI workflow across many different users is very low compared to laying bricks, and even former technologies, tractors and so forth. And so cutting edge model training is expensive, which many of us don't do. Data prepping, the use of energy, the data centers. The other day, China had to bury one under the ground because under the water to keep it cool. Data integration, change management aspects of it, those are expensive. But AI is the most cost scalable general purpose technology available today for small and developing states that delivers a kind of higher impact per dollar than capital-intensive technologies of all of the other industrial revolutions. So the truth is, the opportunities are here. An MSME with just $20 a day can actively compete with a large international company because the same PR persons that you're going to hire, the same accounting persons that you're going to hire, the same legal people you're going to hire, the same customer relations and letter writing and everything can be automated using an AI agent that you train, even with your own language, using apps such as NVIDIA AI, with your own face, with your own voice, right? Speaking to customers that they don't even know if you're using, for example, a digital twin. Now, one person, and let me just tell you, I have a colleague right now who is 25 years old, and who has jumped on AI from as early as 2023. And he and his wife they're now working on this company. They created a little AI to provide some solutions. And they provide dashboards to military bases and so forth. And they're essentially earning $7 million a year. And that was when they said that to me in 2023, 24. And I know they were hiding a little bit as well too, trying to be a little humble because that's how they are. But the bottom line is that it is a cheaper technology. It should never be articulated as something expensive because even that discourse will perhaps make people think that it's the same cost as the former set of technologies, which were the hardwares and softwares and the data centers and so forth. So we have to get out of that mindset and start saying things such as, you for $20 a month, you can compete with a company that is 200 times bigger than you are, to get people more accustomed to it, to get people not to fear it, to get people not to think it's too complex, it's too expensive. It's simple. English language. If someone from a high school can run a company now because you just type it in English language and the AI does everything for you. So it's just to let you know that we have to move into that kind of mindset. We're moving and move out of that mindset, I should say, of thinking these technologies are too expensive and these technologies are too complex, because in 2025, I can assure you that they are actually not.
Thank you. Thanks for that, Professor Wallace. So the technology is not as cost prohibitive as we think it is, and we should take full advantage.
Yes.
Thank you. Thank you so much, Professor Waller. Do we have any other questions from the floor? Yes, we do have a question.
Is that working?
Yeah. Yes.
It's on now? Okay. Right. Not a question, but as we listened this morning to some of the pleas made by, I think it was Sybil and another representative over there in respect of SMEs, and the point made by Benny in terms of LFIs and what we're doing, as much as possible, and perhaps there's more that could be done in terms of looking at equity-type products to support SMEs. But I'm just wondering if there's an opportunity for greater collaboration with the government entities in country. So, for example, we have the investment authorities in terms of providing guidance and advice to small businesses, as well as, I know in some countries there's what's called an entrepreneurial development fund, where they provide seed capital, equity to small businesses. Utilizing that along with the technologies that we're talking about, is there an opportunity for a more structured approach across the region towards helping small businesses develop and giving them the tools and that they need to do better going forward? So I'm just wondering if there's an opportunity for greater collaboration and a much more structured approach where this is concerned.
Yeah, I think there is. And I would urge us, and including the Central Bank, to reflect on how we could pull that together. in a more cohesive way to make the offering simple for those SMEs. And I'm thinking of partners like IFC and others that we could pull in and others to assist us with that. CAF, there's some partners I think we could potentially pull together. Once we clarify the vision we want for that sector, have for the sector, and our individual roles. But they need everything. They need everything. Advice, credit, a range of things. And we have to provide that. The financial inclusion survey, which we did in 2023, showed that people rely on friends and family for a lot of and conspiracy theorists for a lot of their advice. No, that's why you'll go and borrow to invest in cryptos. Not a good idea. Hello, who am I speaking to? Well, I'm not speaking to you, you guys know better than that. But you'll be surprised how many people would do that, chasing a 3x or 5x. Take out the little working capital that they already don't have to try to chase something that they hope will eventually allow them to be able to meet the capital. I mean, these stories are there. Some of you know of some of those. So there's a lot that's needed for that sector, and I agree with you, Michael. Michael Spencer, for those online, is the CEO of ECAB. I really feel that this is an area we need to give more attention to. So thanks for shining a light on that as well. Cadella.
Thanks very much. As I was listening for the entire morning, I've been just jotting down notes, and I've realized that most of us are on the same page. But I just want to touch on something that I've been very passionate about since we were coming out of COVID. And it has to do with what we refer to then as a non-formal sector, which is what the central bank is doing now as it relates to these SMEs, right? And those that's growing. So I remember making a current call for our government then to have more collaboration, because as one that worked in the financial sector for, then it was maybe 20 years, I've noticed that it is not that people don't want to do, but we do not know how to do. And then I thought it was an opportune time when the government was assisting people like hairdressers, etc., with financing, that we use that time to collect data. And I also made the call for us to have collaboration within the LFIs, Social Security, IRD, Finance, Corporate and Intellectual Affairs, Chamber of Commerce, and we ought to build on our policy development. And I'm still passionate about it because I'm seeing the gaps. Our policymakers, we ought to be, we need to have the political will, and Mr. Conwell, I'm directing this one to you, to start having our drafting sectors, our drafting side of it, to review our laws. We need more amendments, and obviously we would need new laws. From time to time, even for example, the ML, because I am a compliance officer, and you know, governor is very passionate about simplified banking. And I'm saying to myself, is this a case where if the LFIs through our banking group, if they would sit and think, okay, what it is that is avoiding people from opening new bank accounts, is it that when we do a risk-based approach within the financial sector, that these people are really high risk, that we cannot give them a simplified banking account? And without the central bank having to move in to say, okay, we need this across the region, right? And I think we have to be more intentional about our jobs, what we do, putting people at the core, building trust. Because if we were to continue along that line, I think we will just be operating in silos. We will come to these beautiful symposiums, conferences, and then we go back, and then where do we go from here? Because we must have the will, in my opinion, to put these things into practice, right? I remembered not too long ago, a colleague which I've worked with called me to say she wanted to open an account for a customer. The customer couldn't fall under the simplified banking
due diligence
sector,
yeah.
But And then she was asking my opinion, and I said to her, I don't need to give you an opinion on something that is already there. And I first asked her the question, why do you think the bank is asking for a piece of ID? And I said, that customer, you also have to do your risk-based assessment. And if you understand your risk-based assessment, what are the 3 key areas for that customer that you need to identify, right? Where the customer was born, geography, the type of customer, which means what he or she does, and then the transaction that they do. So I said, the piece of ID that you have in your hand, is that person from a country that is high risk? Because that's the only thing that the ID could honestly tell you outside of who that customer is, right? And then we had the conversation, and she moved along. So I'm just saying all of this to say that as leaders, we really need to understand our roles, what we do. And we are now in a position to make the change or be the change that we want to see. And I think it's, honest across the ECCU, it is time that we start doing our jobs that way. Not just red stamp, move along. And as Governor always say, when you're placed in a position and you can make change, why not do the change? So this is just my contribution, Governor. I think it is time that we just move beyond conferences and start putting what we know into practice when we go back to our individual organizations. So, thank you.
Thank you for that passion. Moderator, the Minister Cornwall wants to respond immediately.
So, Kadela, I take note of what you said, but I just want to alert you that our governments in the region, we do have a very tall legislative agenda. And from my knowledge, we do not meet every week as a parliamentary organization. So it will come, but it will take some time to get there. Okay?
So where there's a will, there's a way. And I'm hearing there's a will, so there will be a way. Moderator, back to you. I think you want to send us to lunch now?
I am hoping to send you to lunch now. DG, the lunch is ready. Very good. Excellent. I've been trying to send you to lunch for a little while now. Everyone, thank you very much, Governor Karina, Professor Waller. Thank you for your insights. This was a very rich and meaningful panel discussion. I trust everyone walks away with something that they can put into practice immediately. If nothing else, just something to think about. And with that, please do enjoy the rest of the day.
Thank you very much, Ms. Lake, and to our panelists for a robust discussion. Right now, I call on Dr. Chanel Thompson to give our closing remarks.
Good afternoon, everyone. Madam Master of Ceremonies, please allow me to adopt the protocol that has already been established, with the exception of noting and recognizing Minister of Finance Dennis Cornwall and ECCB Council Member Governor Timothy Antoine, Deputy Governor Dr. Valda F. Henry. I don't see her, but our Chief Director of Policy and our board member for Anguilla, and of course you, our specially invited guests. Last evening, Governor Antoine at the end of Sir Arthur Lewis indicated that he was standing between you and the cocktail. I am literally standing between you and lunch, which is more important, I think, than the cocktail in the grand scheme of things. I certainly want to thank you, our friends, colleagues, partners from the licensed financial institutions and from the financial sector as a whole for attending this 7th annual conference with licensed financial institutions. It was certainly a treat to have you here, and it is indeed a treat to meet you each year. We have with us this year some newer guests, some specially invited guests, and some former colleagues, such as Mr. Miklos Swift, Mr. Akinola McLean, Ms. Puzzle from St. Vincent. And with this year, we tried to shape a conference that is reflective of our current realities. The issues surrounding culture and people, the issues related to data and integrity, and the issues related to the global uncertainties that we experience. And of course, you heard it, the issues related to artificial intelligence and small and medium-sized enterprise development. And so we got a very enriched discussion, and it would not have been possible, of course, without your help and the help of our panelists and moderators on a whole. So I definitely take the opportunity to thank you, our panelists and moderators. I specifically want to single out, I know this might be a little dangerous, but I want to single out, especially as a moderator, Mr. Yusuf Stafford, and our two young Master of Ceremonies, Ms. Stephanie Pascal and Mr. Gideon George. These three very young persons are certainly the future of the central bank, and they are literally new staff, moving on to permanent establishment this year. And this was their first swim in the pool, albeit a very big pool. And so I really want to thank them. They did an excellent job today. And finally, you know, we heard some sort of central and reverberating themes. We heard the themes of pragmatism, collaboration, culture, and data. And as you go back to your various roles, we want you to think of these themes. We want you to be pragmatic in your application of our standards, the theories that you hear. We want you to collaborate more as institutions and regulators, and certainly engender a culture that is accepting of the environment that we face, but of course a culture that pushes us forward. And so I will leave you there for my very brief remarks. I trust that you will enjoy lunch. Do recall that there is a tour scheduled for later this afternoon, those of you who wish to go into Basseterre, and for tomorrow afternoon as well, there is a tour. So again, thank you very much, everyone, and do have yourselves a wonderful afternoon and a safe trip back when you leave. Take care. Yes, one final thing. There's Bank of the Year awards this evening, so don't miss it. Those of you who've been invited, you should have received notification of that. So we look forward to seeing you there. Thank you.